What an amazing start to 2024 with Bitcoin CME chart giving us so far a $3,000 God candle to the upside. We've been waiting for this. We spoke about this on my last update, which was on Sunday of last week, and we got the perfect setup with the false move week beginning into the W formation that led to this breakout. So in this video, I'm going to show you that first, where you could have got your entries, and then we're going to talk about what might happen next. This is obviously all in anticipation of the ETF. There is a lot of news going around that the ETF might be approved early, and as a result, people are front running this news. Is that a good thing or a bad thing? Let's work that out. So if you're new here, welcome. If you are returning, welcome back. Be sure to smash that like button nice and early. Hit subscribe if you're not already subscribed. Let's get into the alpha of this video. Starting with the CME chart, this is the $3,000 God candle that I was talking about. We can see here that we opened with a gap, and pretty much as soon as the CME's open, we have been straight up from there. There is no wick to the downside on this current candle. On the BLX chart, this was the chart that I spoke about on Sunday, and I talked about us needing to get a close above 42,200 to signal the up only phase of the bull market. Now, I've seen so many questions. I've been tagged so many times on social media asking if this qualifies as a close above, because we needed a full bodied candle close above, and we got to 42,284. So look, to me, it's hit and miss. I would have liked to have seen more of a close above that just to give me a little bit more confidence. Does it qualify? Potentially, I guess time will tell. But if we can stay above it for the rest of January, which, you know, it's many days to go at this point in time, that would give me more confidence. But, you know, a $80 close above, it's kind of hit and miss. I don't want to say, yes, that's definitely it. In all honesty, I would have preferred to see a bit of a better close above, but we knew this was a possibility. We knew that there was a possibility of a rally into the ETF news. The problem with that is that it could be a final rally before a sell the news event. So I don't actually like this rally, to be honest with you. Happy to profit from it, but I would have preferred something a little bit more slower and more sustainable leading up into it. But to know that it's mostly driven by CMEs, that's kind of positive. However, it does mean they can dump faster if the news is not good. Maybe they know something we don't know. Let's hope that that turns out to be the case. So having a look at the Bitcoin chart itself, this was the trade opportunity this week. So as you know, we always talk about the weekend trap price action. I'm on the 15-minute time frame so that I can show this to you really, really clearly. And on my last update, I talked about this area here being a potential trap, because this is our weekend trap box right here where price mostly consolidates. And we can see here that we had a wick right after the close of US that price never returned to, and we had this area of price action as well, which would have broken below, and also price didn't return to. So that meant that shorts were trapped here, and for the rest of the weekend we did not come back to them. There was also a possibility that longs could have been triggered up here, and the 100x longs would have been liquidated on a move down that we got in the dead gap zone. Now that move there in the dead gap zone then actually started the real trend very, very early this week. So usually we would look for this sort of a formation over Asia to UK changeover or UK to US changeover. But this week we happened to get the W formation, the left side in the dead gap zone, and then the right side during Asia. Now, I personally don't like taking trade setups like that. I don't like the dead gap zone price action because it tends to happen high volatility, low volume. And that's because it's the whales manipulating the market before the actual market makers come in. So I tend to avoid the dead gap zone price action for entering trades. However, in the Asia session, once the initial high and low of the day has been set, it would be considered safe to trade. So the initial high of the day was set up here. And when it comes to setting the initial high and low of the day, some people include the dead gap zone and some people don't. I tend to include it because I've just found more often than not one of those two does get set in the dead gap zone. So in this case, this red hammer right here ended up being the initial low of the day. So once those two are set, it's considered safe to trade. And you can see here, that's where we ended up holding. We did not return back to the initial low of the day. So it would have been considered safe to trade as of this point. Now, I didn't take this W formation trade. If you guys are watching me on this channel, you know that I've been in long positions for quite some time, both on Bitcoin and Ethereum. So I wasn't really in a rush to open any more. I did want to open another long, however, but only on the right conditions. And for me personally, because I don't usually like trades or price action during the dead gap zone, I didn't take a trade on this second peak of this W formation. A lot of people in the TTC community did, however, so you could take it off the once the second peak was in, and your stop loss just needs to go under the initial low of the day, and then your initial target would be back at the high of the week. So a trade like that was a 5.6 to 1 risk to reward. So I personally didn't take this trade, but I do know a lot of people in our community did, especially because our community, there's a lot of people on Australian time zone, and so this was a great time for them to trade. However, what I did take was the break and retest of the 50 EMA. So this area here was my entry, but with the same target to the high of the week. So I now have 6 trades going on Bitcoin and Ethereum, and that's probably all that I will add at this point in time. I'm just happy to ride the trend for as long as the trend is there. But this would be a second chance entry. So if you do watch this channel, you'll know I always talk about aggressive entries and conservative entries. So that first trade setup that I showed you, the second peak of the W, that would be considered an aggressive entry. And this one here that I actually took, that would be considered a conservative entry because price did break through the 50 EMA, then it came back for a retest. It held the 50 EMA for a number of candles there. And at that point in time, you should be, happy to get in. Your stop loss on this also would only need to be under the 50 EMA in a trade setup like this. So this gives you here a risk reward of 11 to 1. So see how a conservative entry could actually return you more money sometimes, because in this case, you get to have a tighter stop loss. So that was the setup, but let's have a look. Let's zoom out and have a look at where we are now, some potential targets. Also should have a look at some liquidation zones as well, just because we've broken through some really key levels. But let's start with the daily first. So this was our ascending triangle. This was our trap trader zone below price at the 50 EMA. And we also had trap traders above, which have either already been liquidated or released at this point in time. The trap traders below price are well and truly done. So we no longer need this channel anymore. And we want to have a look for some vector candles above price. I've already got this one marked out here. That sits between 47,325 and $50,700. When we zoom out on that, we can see that that is the next unrecovered vector candle on the daily time frame. And there's not really much in between stopping us from getting there, because we zoom in on this area, we are now above this vector candle. This is just a cluster of resistance really. And the next one's up here. So we're kind of looking at around 47,250 as the next resistance, and then up into this higher zone if we can break through any of that. Now what we actually want to do is we want to line that up with heat map orders to see if there are any shorts currently waiting, which would be, a bit silly to do that right now. And also liquidation levels to see, at this point in time in such a strong trend, I think any liquidation levels would just be short-term pullbacks unless we end up with really negative news. But nevertheless, it's still worth knowing what's going on. So let's have a look at the heat maps first. And the only red zone I can see currently above price is at 47,800. So what does that line up with? That lines up with about 50% of that daily vector candle right here. I already had it marked in yellow. Now we want to find if there are any high level liquidations around there as well. So having a look at the short-term liquidations, these are the ones since the 29th of December. We've got some high levels sticking out at about 46,794. And then we've got another level up here at 47,230. Now look, there is a lot of liquidity building below, but this is what's interesting. You can see that there's a lot of liquidity below with the pink and orangey lines, right? However, what you need to look at, there's obviously going to be liquidity below because people are opening long positions on leverage. That just makes sense. But what you need to look at is where is the biggest spikes of that liquidity, because are the lowest hanging fruit. That's going to be the target when a reversal eventually does come, providing these trades don't close before then. And the biggest spikes closer to price are where our interest is. So we can see here that even when you look at all these lines, the biggest spikes are actually closer to the current price than further down where you probably should have gone long on this W formation. So it just goes to show how the W formation, it's the setup before the market maker makes the move. It's where they're accumulating their contracts before the next big move. And if we can learn to identify that, we will be in before the big move happens. So we're not trying to trade against the market maker. We're trying to trade in line with them and anticipate when they are accumulating contracts so that we can do the same. If we can identify those W and M formations really, really well, then we will be able to get in on the trades nice and early before those big pumps come. And those big pumps just help our trades. So the W formation that I showed you was the perfect entry. After that, you get a level 2 and a level 3 rise. And the later the rises go, the more retail, amateur retail jump on. So they tend to jump on at the worst moment. And you can see that here when the leverage grows closer to price after big pumps. So we've had this big pump through here, and the most amount of leverage has been opened in the recent pump over the last few hours. So eventually when they want to pull back maybe or issue a reversal, we don't know which one it's going to be at this point in time, but that's usually what they come for. And so that's why, you know, liquidity doesn't mean that we're going to have full-blown reversals. When it's liquidity like this, where the highest level is actually not that far from the current price, that could just be wiped out in a pullback, you know? So that's, again, it's just why it's important to try and get in on your trades early and don't FOMO in on big pumps, because you are the number one target when they need to come back and collect some open positions. They do that by liquidating you or stopping you out of trades. So we can see here at, you know, only 44,860 will take out a big level between that and about 43,542. So eventually that will become our area of interest, but we don't really worry about that until we can identify a stopping volume candle. And I don't think we have that yet, but we'll have a look at the chart. So just know that it's there for now, but this is a good example of how liquidity grows in fast pumps, which is one of the market makers' objectives, is to induce you into a position to help them fill their bags essentially. So looking a bit further out, let's have a look at some big pockets that we have currently above price. This one here is standing out to me at about 46,800. And then we don't really have another kind of big pocket of liquidity until up here at the 50,700 level, which I talked about. That would be the top of that daily vector candle. Now this is only a 7-day. So considering people would have been long for a while, let's have a look at the 1 month as well. And the current price has just wiped out this high level of liquidity right here. This is where we consolidated for a bit at 45,300. And the next seems to be back up here at 47,900. And that lines up with this. So somewhere around that kind of makes sense, providing we don't end up with a stopping volume candle that does a complete reversal. But I can't really see why that would happen at this point in time. I mean, we don't even have a typical retail resistance until 47,250. So why wouldn't we just keep going, I guess? Now I've got a 1 hour area of interest sitting here between about 46, let's say 46,200 to 46,450. I think in order to find that one, I would probably have to go all the way back to the bear market. So I won't scroll back that far. Just keep an eye on that area. It may be an intermediate kind of area of a resistance, but if we can get through that, then I don't really see any reason why we shouldn't go for the daily vector. Of course, just know that if you're in a good trade and you've made some really good profits so far, it doesn't hurt to take some profit. And I'm talking about leverage trades, of course, because things can swing around at any moment. You don't have to take full profit, but it does not hurt to take partial profits along the way. When it comes to spot, you know, we're not selling till the peak of the bull market, well, before the peak of the bull market. So we don't really have to worry about spot, in my opinion. Now, let's have a look at some altcoins, because there's a few potential things that might run next based of this. ETH, of course, is at resistance right now, broken through its 50% vector line. ETH BTC is the one to watch as well on this, because this is an idea from my last update, and this is what's happening now. This is the retest. We don't really want ETH BTC to come down too much lower because it's been a full recovery of this vector candle right here. And at this point in time, it's just holding this one as well. So we would like this to be as far as the retracement goes. If it can now start to push up, then that means your ETH USDT will do even better than what it's currently doing. So ETH looks good, but let's have a look at some of my altcoin alerts that went off. So my first alert that went off was for VINU, VINU USDT. Had this long wedge formation. It's pulled back into this vector candle right here, but it held above the 50% area of it so far. Looks like we have a breakout now, so a bit of a retest of that. If the retest creates a higher low, would be a really good entry. This one is super volatile. Look at all of these wicks here. So it's not for the faint-hearted. It's a very low cap coin, very low volume. So I'm only trading this on a higher time frame for that reason. Be a little bit difficult to scalp something like this, but it's looking like it's got the goods so far. There is a little bit more confirmation needed. I do have a small position on it so far, but I'm looking to add to that position should I get that second side that, you know, kind of looks something like this. You know, if we get something like that and it creates a higher low, I would probably add to my position on this. Now this one is available on Bitget, so if you are looking for an exchange to trade this on, check out the link down below for Bitget because there's some sign up bonuses in there and they have a really good selection of coins. Not to mention the exchange links down below do get you access to my Discord as well, where I've actually shared this trade setup earlier for the community. And another possibility is RUNE, which to be honest, I didn't get in on RUNE early enough, so I'm not really all that interested in jumping in on it where it is now for the very long term. However, it seems to be holding this support quite a number of times at around the $5 mark, and we've had a bit of a pump to the upside today. So a couple of things could happen with this. It's either going to come back, because that's going to be its third touch to this trend line up here. So if it does come all the way back to touch the bottom again, I don't think that's likely, but if it did, that's where I would probably take a chance on it to expect a breakout following that. But what's probably more likely than that would be a retest of the EMAs. So it might only come back to create a higher low. You've got the 50 and the 200 EMA here. So that would be my area of interest there. And it would be somewhere in the halfway mark of this vector candle. So if price does reject off this trend line again and then come back here, that's where I would reassess. If I get a higher low there and I have some bullish looking candles, that would be the entry. But for the long-term investing, I would prefer it to come down and touch one more time. And look, because it's a 4-hour time frame, that could take a long time. So just keeping an eye on RUNE for now. KUJIRA has just broken out as well. Now I do have an entry on KUJIRA already down here at 2.9. Just looking to add to this. This one is a long-term portfolio hold for me, so I will add to it when it's, you know, doing good things. I really should have added to it off all of these multiple bounces off the 200 EMA, but I must have just been distracted at the time. But something like that is where I usually would add to a long-term hold, but it's broken out now. So if it does come back again, I'm simply just looking for the same thing. Just prove the new trend to me with a higher low, and then I'll get involved, especially if that higher low ends up holding one of these vectors that created the initial push to the outside. Now my next one is actually Doge, which is interesting, but it's holding a really, you know, pretty significant formation. Held this support here a number of times. Looks like a W formation within the triangle. That's a really good entry. I'm personally not going to trade this one because I think I have enough Doge for my portfolio for the next cycle. Like I'm happy with the allocation that I have. So really, if I wasn't, and if I did want to add to this, we've got a bit of a breakout, but I would like to see it a bit stronger than where it is now. And then once that's done, again, just come back for the retest. And if I get it, great. So somewhere between the 50 and the 200 EMA. And I also can see a green vector candle right there. Again, same 4-hour time frame. So that candle will line up with these two EMAs, and that would be a really good retest area, providing the final candlesticks gave me some bullish confirmation. And finally, I have MYRO, MYRO USDT. This one is available on Bitget as well. I do not know why my trend line is there. I think it's because I originally had it on log scale, but nevertheless, let's just pretend that didn't happen. So this one here, that's actually where it should be. This one here has already done the break and retest. This is a short-term trade for me, by the way. This is not one to go in my long-term bag. I pretty much just want to trade this back to resistance, and then if it breaks through there, we're in price discovery, so I might hold on a little bit longer. So we've got the break, we've got the retest. If you're not already in on this, what do? The only option left is to wait for retest of EMAs. So anytime that this pulls back to the 200 on the 4-hour chart or the 50 EMA, they're going to be good buy areas, providing those touches to the EMAs are bullish candles. They close as bullish candles on the 4-hour time frame. So fair few trades for you to keep an eye out on there. Just remember, all those altcoins are on the 4-hour time frame. That does mean that it could take days or potentially even weeks to come back for your retest. So patience is key. Just set your alerts on them and then forget about them until those alerts go off. But with Bitcoin, we're looking really, really good. Doesn't really look like a reason to pull back anytime too soon. However, because of the timing of this pump before any actual ETF news is released, if you're in leverage trades, just remember it does not hurt to take some profit off the table. For spot positions, we're holding for the bull market. So no need to worry about those. We expect the ups and the downs and we're happy to ride the wave. As always, if you enjoyed this video, please be sure to smash that like button, hit subscribe, and share it around with a friend if you find that you are getting value from this channel. I will really appreciate it so much. I'll see you on the next update.